Welcome to this month's Market Update. I'm here today with KC Lowe, Senior Consultant with Frontier Advisors Capital Markets and Asset Allocation Team. Hi KC.
Wayne?
Let's start today just with a bit of a general global economic update, if you don't mind.
Yep. So what we've seen in the last 12 months is that growth globally has started to slow down. So it's gone from a synchronized improvement in global growth to one where we're seeing a general slowdown now, and this is across regions. Why has this occurred? So there's a few reasons for that. Ones that we've touched on before. The Chinese economy has slowed down. World trade growth has also slowed down, largely because of this US-China trade tension that's going on. And of course, central bank policy has started to tighten as well. So those three factors have been the key reasons for the slowdown in growth. Even in the US, where growth is still positive, but we are seeing some early signs that it's likely to slow as well. When we look at business sentiment surveys, business investment surveys, those are no longer going up. And of course, if you look at the yield curve, that's been in the spotlight recently with it inverting for a short period of time in early April.
So just on the yield curve, could you just explain what exactly is the yield curve and why is it important for investors to check that?
Yeah. So when people talk about the yield curve, they're referring to the interest rates across different maturities of government bonds. So you have short-term government bonds of 1 year maturity, and then you have long-term government bonds, let's say 10 years in maturity. And usually what this curve looks like, it's an upward sloping curve, meaning long-term interest rates are higher than short-term interest rates, which makes sense because as an investor, you would want a higher return, a higher interest rate for you to put away money for longer periods of time.
Sure.
And what happened early in April is that the yield curve inverted, meaning the short-term interest rates were higher than long-term interest rates. And that has been usually a good indicator of an upcoming recession. But there have been instances in the past where it got it wrong, and there's also been instances where the yield curve could invert, but it's actually several years before the actual recession happens in the economy. So it's something to watch out for, and definitely suggests that risk in the global markets are increasing. But overall, yes, global growth is slowing down.
Okay, well that does sound a bit gloomy. Are there any positive indications for us to hang our hats on at the moment?
Yeah, so the positive is that the central banks have taken notice of this slowdown in global growth, and they have adjusted their policies for it. So the one to highlight here is the US Federal Reserve. They've come out in March and announced that they are no longer increasing interest rates, so they've halted their hiking process. And this is a big change from what we heard from them in October. So back in October, they were talking about how they're likely to continue to increase interest rates, and now in March, they've come out with an announcement saying that they're most likely not going to increase interest rates for the rest of the year. This is a bit different from what the market's expecting. So the market is actually expecting some rate cuts to happen this year as well. So there's some differences in views there.
Okay, so it's the US Fed. What about other central banks around the world? How have they reacted?
So the European central banks have acted in a similar fashion to the US Federal Reserve. In their latest announcement, they've talked about how their own expectations of increasing interest rates. It was expected to increase mid this year, but they've actually pushed that out to end of the year now. They've also announced more stimulus to boost bank lending to businesses as well. So they've also stopped tightening and possibly started to ease a bit as well. And then domestically, the Reserve Bank of Australia, we've covered this in previous videos. They have shifted views from potentially increasing interest rates to now seeing scenarios where they could be increasing or decreasing interest rates. Overall, though, the positive is that inflation is still quite low to modest levels globally, which means that the central banks globally have the flexibility to stay accommodative for longer if need be.
All right, thanks KC. That's all we've got time for today. Of course, this time next month, we'll be right on the cusp of a federal election here in Australia. Might be some interesting developments to talk about then. Thanks for joining us.